What's up guys, it's Ndemazeah Godlove here, and today's video is very urgent. Over the weekend, the US President Donald Trump authorized military strikes on Iran nuclear facilities. And that has just shaken the entire global market landscape, like completely. If you're trading gold, Nasdaq, US 30, US 500, Great Britain Pound, JPY, CAT, or any assets in Forex or in futures, then you have to stick to the end of this video because this video is what you cannot miss. So as urgent as the matter was, I had to rush to the office to shoot this video for you guys. You guys know the popular saying, proper preparation prevents poor performance. Even in Forex trading, nothing happens in Forex trading by chance or by luck. You need to be prepared, all right? So let's start with facts. Over the weekend, Saturday, June 22, US airstrike hit 3 major Iranian nuclear sites. This was not just a warning. This was a major escalation and open attacks on Iran nuclear capabilities. And according to report, it was aimed at completely setting them back their nuclear development by at least 3 to 5 years. They just wanted to just stop the entire program of Iran trying to create nuclear programs and all of that. I don't want to go into the politics. What I'm concerned is how this is going to affect us Forex trader, which is definitely going to affect us. So that's why I'm preparing you guys. Oil spikes. So we during that particular time, remember, even though the Forex market is closed, by the moment I'm recording this video, this is Sunday, the Forex market is still closed, but there are websites where we can still see, or analysts or investors can still see the movement of the market. Though you can't trade it, but you can still see what's happening over, or what happened over the weekend. So at that point, oil spiked. So there was a spike in oil. Gold also spiked. Safe haven currency pairs rally. Equity market dip. And as traders, we have to know how to react. And more importantly, how to profit from this. Anytime there's turmoil in the market, anytime there is instability in the market, we look for how to profit from that. We look for how to make money from that. That's what makes us profitable Forex traders. So most importantly, how to profit from this. So let's talk about the immediate market reaction by the time that actually happened, just to let you guys know the gravity or the impact of this particular fundamental news events or geopolitical events that happens over the weekend. So gold ex-AUUSD, about 80% of traders in the Forex market now trades gold. Ironically, I don't know why, but about 80% of traders trade gold. And there was a major surge by almost about 1.5% in earlier Asian market, classic safe, because of the classic safe haven. So because of this, many people are moving to gold as a safe haven asset. So oil, which is WT, if you trade it in your broker, most brokers, you see it as WTI/Brent. WTI/Brent. So oil also jumped by almost about 2% as investors panic over possible disruption in the Strait of Hormuz. I'm sure that's a major oil pipeline. So because of all these bumpings in Iran, so many investors are scared that there can be eruption or there can be a disruption in the oil supply. So oil also jumped by almost about 2%. So USD JPY rose as the dollar took a short safe haven bid. So most of these were those were a few things we witnessed by the time that news was released. Nasdaq and Dow Jones both gapped down on pre-market futures. Traders fear escalation equal to market instability. Remember, anytime traders fear escalation, we have market instability, which is equal to sell off. So many people are scared. They sell their positions, they sell their assets, they sell their equities, their options. So that's why I just summarized this to say both market gap down on pre-market futures. So traders fear escalation is equal to market instability equal to sell off. All right, so make sure you stick to the end of the video, because at the end of the video I'm going to be showing you guys exactly what to expect at the opening of the market, how you're going to trade it at the opening of the market, and how you're going to trade throughout the week. So please make sure you stick to the end of the video. That's the most important part. You need to be able to know what to expect and how to trade those particular currencies. Before we move to our charts, so that I could show you guys what to expect and exactly how to place your trade, Let's talk about what to expect moving forward into the trading week before we jump into our chart. All right, let's start with gold. Like I said, gold, almost about 80% of traders nowadays trade gold. So we have to be very, very prepared as well. So starting with gold, bullish pressure likely to continue. All right, overall, gold has been bullish on the monthly time frame since August of 2024. So we are expecting gold to continue to. I'm not talking about gold being bullish on the 1 hour time frame or 30 minutes. I'm talking about overall, like the monthly time frame or the weekly time frame. All right. So bullish pressure likely to continue. If Iran retaliates, we may see gold break 2,400. Currently, I'm going to be jumping on my trading view very soon. So if this continue, we can see gold going very, very high. We're currently standing on $3,368 on gold. So if this continue, we can see the market breaking almost the 3,400 level mark. All right, so that was actually a message. So if this continue, we can see the market breaking the 4,500 level mark. Nasdaq. So Nasdaq expect continued downtrend. So we are expecting Nasdaq and US30 to continue to sell. And why is it going to be like that? So expect continue downtrend volatility. Market hates uncertainty. All right. So that's true. Market hates on anything that is uncertain in the market creates fear and people panic and people do sell-offs. All right. They sell their position, they liquidate their position. So expect continued downtrend volatility on Nasdaq and US30. Market hate uncertainty. Tech stocks may take the biggest hit due to risk evasion. All right. So if you guys know of risk evasion, when things happen like this, the highest company that are going to take the highest amount of shock are going to be tech companies. And Nasdaq and US30, obviously Nasdaq just measure the top 100 tech company in the United States, while US30 also measures top 30 companies in the United States, not obviously the tech. Nasdaq is strictly tech, while US30 just measures the top 100 companies in the United States. Then something like CAD JPY, we expect CAD to continue to sell. All right, bearish CAD due to oil supplies fears, and JPY also gaining strength. So we expect a downtrend to resume. So CAD JPY, we're expecting CAD JPY to continue to sell. USD JPY might rally short term due to dollar strength. All right, we're expecting the dollar to be a little bit strengthened. We're expecting the dollar to be strong. So that you might actually see USD JPY rallying for a short term due to that strength in the dollar. But if Iran wars intensifies, if the war intensifies, JPY will obviously dominate the US dollar, and you expect the dollar to start, you expect USD JPY to start selling at that particular point in time. So it just depends on what the week is going to go on, what we're going to see going into the week, how Iran is going to react to this. If they retaliate and continue to fight back the United States, then we expect JPY to dominate. We expect JPY to rally. Many people are going to be running to safe haven currency pairs. Remember, we have safe haven currency pairs and safe haven asset. A safe haven asset is an asset like gold. So that's why you see gold. Gold is going to be buying for the entire week. This high probability gold is going to be buying for the entire week. JPY is also a safe haven currency. So for now, we expect a USD JPY to rally just for the short term, just for a couple of days. If Iran doesn't retaliate, then we expect USD JPY to continue to rally in an uptrend. But if Iran retaliate, then JPY will obviously dominate the United States dollar. And if it dominates, we have USD JPY, you expect the market to sell. You expect USD JPY to sell. Let's quickly jump on our chart now so that I can show you guys what you should expect at the opening of the market and how you should trade this moving into the next week. Obviously, we're going to start with what I just spoke about, which is gold. Gold had one of the craziest price action I've seen throughout my entire Forex trading career, 10 years of trading the Forex market. I saw one of the worst price actions I've ever seen last week on gold. Look at this on the 1 hour time frame. Even Euro USD is going to move. Even Euro USD was moving more than this. Can you see how the market was just choppy the whole place? Anyway, that's the Forex market. Things like that do happen. Look at this. Can you see previously we had price action actually moving? So moving into the new week, let's start the opening of the market. I'm just going to use a clear space so that you guys can understand. If I can just use my clear space, the market last week was just something like this, like this, like this, and then it closed somewhere here, all right? This is the close of the market we had last week. What you should expect from what I just explained is goal to rally, is goal to have a gap. And gap trading is very, very important. There's already a video on this channel even teaching you guys how to trade the gap in the Forex market. So here it was the close price. This was on Friday. I'm just going to put F here. That was where the market closed on Friday. And this is where we are expecting the market to open on Sunday. This is where we are expecting the market to open on Sunday night. All right. This is the market open. Now, the whole of this area from here to here, you can see that's a gap. In the Forex market, this distance from here to here, you actually see it a gap. It's just going to be a gap. Just something like the screenshot you can see. That's a gap in the Forex market. Nothing, you don't see any candle there. You don't see any line, nothing. It's just a gap because the market ended somewhere here. The market closed here on Friday. And the reason for these gaps opening is very simple. Even though the Forex market is closed on Saturdays and Sunday, there are still geopolitical events. There are still fundamental news events that are affecting the Forex market. So the market is still moving up and down, but you are not just seeing it on your side because the market is closed. So by the time the market opened on Sunday, if the price was up here, that's why you see the market will just open here. But what happened? Since the market closed here on Friday, that's why from here to here, this distance will be just an empty gap, just an empty space. Nothing is going to be there. That's called a gap in the Forex market, and that's how the gap is formed. All right, and in our case, this is the gap from here to here. I don't know how big this gap is going to be, but it can even rally to almost 100 pips, between 50 to almost about 200 pips. Expect the gap to really be big. Now, how do you trade these gaps? At the open of the market, you need to wait for at least an hour. All right, you need to wait for at least an hour before you can place any trade because the spreads are going to be crazily high. So whatsoever you are doing, wait for at least an hour. When you wait for at least an hour, immediately the market is open. You have to trade this particular gap, which is simple. Whatsoever goes up in the Forex market comes down. Whatsoever goes down, goes down, comes up. It's as easy as that. So this gap has to be filled. We call that a refill in the Forex market, a gap refill in the Forex market. ICT traders have their own funny name, but it's just the same thing. It's gap trading, bro. All right, it's just gap trading. They shouldn't complicate. You guys shouldn't complicate life. So this gap will obviously be filled as soon as the market is open. So wait for an hour, then immediately after an hour, place a sell. That is a short term. Remember, I'm talking about short-term trades and long-term trade. Short-term trade and long-term trade. So you're going to trade a sell. If the market, after an hour, the market has already chopped so deep into this gap, then you're going to let it go. But if after an hour, the price is still rallying around that same price, the price is still around here, then you're going to be selling. All right? You're going to be selling. Even if the price has started dropping a bit, if it's somewhere around here, you're going to be selling. We're going to be selling gold for the short time until this gap is filled. All right. Most of the time, the market will rally and end somewhere where the market closed on Friday, the market will rally somewhere here and then boom, and then continue in the overall trend, which is an uptrend for the entire week. So this one is just a quick scalp. It's a quick scalp. If you're not ready for the adrenaline rush, if you don't know how to manage your risks, stay out of this quick scalp. This is just a quick sales position where you just scalp that quick sell, waiting for this gap to fill. Then as soon as this gap is filled, as soon as the price gets somewhere here, you immediately liquidate your position and take an overall long position. This one, you're taking this one with confidence. Your stop loss, put your stop loss, at least should be very, very wide, maybe somewhere right down here so that you give the market room to breathe. All right. This one, we're going to be expecting this trend to stay for the entire week. We're going to be expecting the uptrend to stay for the entire week. So that's why you are entering this one on the long, and then you just put your stop loss, maybe, I don't know where you're going to put it on, maybe on a 4-hour time frame, maybe somewhere up here. We're going to go on the chart and I'll be able to show you guys. But your take profit right up there, stop loss here, And that is it. Just watch your money prints. More money is made in Forex trading waiting than actually trading. So that's what we're going to do on gold. And not just talking about gold, what if we have another currency pair and instead of the market gapping up, because you're going to see some currency pairs where maybe the market was actually buying before the market closed. But the market closed, we're here, and then boom, the market instead opened down here. So we close here and instead open here. So the whole of this distance from here to here is actually our gap. You just do the same thing. You wait for an hour and then you take a buy position, all right? The market will obviously rally somewhere here and then boom, continue in the overall sell direction. If the market gaps down, you expect the market to sell for the entire week. If the market gaps up, you expect the market to sell, to buy for the entire week. But taking in the opposite direction, this is just a quick scalp because from experience, there's a whole strategy teaching you guys how to trade these particular gaps. So that's a scenario where you will see some assets where the market will jump down, like Nasdaq and US 30. You guys should expect a big gap in the opposite direction, in the direction I just explained. Expect a gap in this direction where if you're entering short term, you will just be entering on a quick scalp on the buy direction. And as soon as it gets to around this area where the market closes on Friday, you should be able to take your position immediately and reverse on a sell position, which is going to stay for the entire week. Remember, this quick scalp here, another method to manage your risks is you can use a trailing stop, because that one, use a trailing stop so that even if the trend, because you don't know sometimes this, when you're trying to trade these refills, sometimes the market doesn't used to go up to this area where the market actually closes on Friday. It ends somewhere here and boom, the sell trend will be very, very strong. So you need to be very, very cautious and you can use a trailing stop. As soon as you go in profit, you trade your stop maybe after every 40 pips. If you're trading something like gold, after every 40 pips, you're trading your stop after every 40 pips. So that even if the uptrend has to resume like what we explained somewhere here, all right? So even if you're taking this sell position, your trailing stop can just stand somewhere. As soon as the market is going down, you're trailing your stop, So that even if the market bounces back, boom, your trailing stop will be standing somewhere here and you'll be knocked out of the position with all these profits already made. The same thing in the downtrend. If you are trading Nasdaq, if you are trading US 30 or any other asset which is going to gap in the opposite direction, which is going to gap in the sell direction. So that is that for gold. We're going to be expecting for gold is simple. Even if you are trading on the lower time frames, like 5-minute time frame, 1 hour time frame and 30-minute time frame is the best I'm going to recommend for you guys to be looking throughout the week. It's simple. One thing you're just going to be looking is, I'm just going to look for another empty space to show you guys this. One thing you're going to be looking on gold is just to go on your 1 hour time frame or your 30-minute time frame. The market obviously does this, boom, 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 boom. It's easy. As soon as the market pulls back, you buy the dip. As soon as the market pulls back and then produce a bullish signal in your direction, you buy the dip. So you guys should be buying the dips on gold throughout the week. And then for something like Nasdaq, where you expect the market to be selling, you should be selling the rallies, because you see this is a rally, you sell the rally, you sell the rally, you sell the rally. So you should be selling the rallies on Nasdaq and US 30 and buying the dips on gold and other assets that are expected to be bullish, like also USD, JPY. So you're only buying the dip on those particular ones. So one other one which I'm going to talk about, there's no way I can do this video without talking about, is US oil. All right, it's oil, crude oil. On your broker, you're just going to see WTI/Brent, or different brokers have different names. But crude oil, we expect the price to rally. We expect the price on crude oil to rally because of the tensions in Iran. Trust me, even investors are going to be very, very shy on actually investing more in crude oil. And when there's fear in the market, they're going to be sell-offs and stuff like that. So we expect a rally in the price of crude oil. So we're going to also be buying crude oil. If it rallies, if it opens with a gap up, the same thing, we're going to trade gap refill and then continue in the up direction. So I just wanted to point out on that particular one. I always say this to students in Godlove University. Volatility is a trader's best friend, but only when you manage your risks. Volatility is a trader's best friend, but only when you manage your risks. If you don't manage your risks, if you don't have good risk management parameters or practices in place, volatility is going to be your worst enemy. But in Godlove University, since we emphasize a lot on risk management, volatility is a trader's best friend, but only when you manage your risks. So keep lot sizes smaller during high impact events. So throughout the week, since most of these positions I mentioned are going to be long-term positions, please make sure you reduce your exposure. Don't go too much big in the market so that you can give the market a room to breathe. We're going to have a lot of volatility, a lot of spikes up and down. So bear that in mind and keep your lot sizes small. Don't hold trade across weekend gaps unless you are prepared for the worst. So, for example, by the close of the weekend, I actually have 2 trades. Luckily, I have a buy trade on gold, so I'm expecting the market to gap. So that one, I'm just lucky. I'm lucky, and I don't believe in luck when it comes to trading. So I'm just lucky on that one that the trade I had over the weekend was a buy on gold. And I also have a sell on US30. All right, I'm going to see if I can pick those screenshots and show you guys. I also have a sell on US30, and I'm expecting US30 to gap down. So that's also good on my side. And I think I have a sell on CAD-JPY, though we are expecting CAD-JPY to rally. So that's the only one which my fingers are crossed. I don't know what's gonna happen. So normally I wouldn't advise anyone, if you're trading on Friday, close all your trade. There are even many prop firms, many brokers out there that will be able to penalize you for keeping trades over the weekend, because the outcome of that trade, they don't know the outcome of events over the weekend. So to just be on a good side, close your trades on Friday. Use trailing stops to lock in profit as volatility increases. I just mentioned this when I was showing you guys the example on, when I was demonstrating the example. Use trailing stops to lock in your profit as soon as the market goes in your favor, but be very, very careful. If you're not too careful and you don't know how to place your trailing stop, you're going to prematurely knock most positions out. You're just going to go in profit. If your trailing stop is too tight, the market is going to come down, knock out that good position, and then continue rallying up. So have a good distance for your trailing stop. Sometimes my trailing stop used to even be 100 pips on gold. So I'm only trailing 100 pips, 100 pips. So the distance between the current market price and my stop loss is always 100 pips, 100 pips. And as soon as the market is going in my favor, the market is trailing. That's the use of a trailing stop. So I advise 100 to 200 pips on something like gold, but bear in mind, use trailing stops to lock in profit as volatility increases. As I did promise you guys a gift at the end of the video, we're going to be doing live sessions back to back in Godlove University this week because of how volatile the week is. We want to take advantage of this volatility and make a lot of money in Godlove University this week. So what is Godlove University? Godlove University is my Forex Academy, one of the best in the world, where we're going to take your hand and take you from zero to something, from grass to grace, from nothing to something, all right? We're going to show you A to Z, beginner to pro, how to trade the Forex market, how to handle all these scenarios, best strategies to use, and all of that. So use the discount code on your screen, GU50, and you have a whooping 50% discount off at checkout in Godlove University. The link is on the video description, and as soon as you are in Godlove University, you'll be part of the Zoom sessions, you'll be part of the live training and trading that we're going to be doing for this week. This is only valid for 500 traders, all right? I almost have about 700,000 subscribers on YouTube, so you already know you need to hurry and take advantage of this. This is only valid for 500 traders, for 500 students, and for 72 hours only. So go and take advantage of it right now. This week is not just about technicals, it's about staying ahead of global news. Make sure you are following verified updates, checking economic calendars like investing.com, and staying sharp. If you want my full weekly trade plan with exact levels of entry, risk setup, join my premium signal service as well, and also join my free Telegram community, link on the video description, or check out the Perps Pro Forex robot that trades volatility like this 24/7. So if you want an EA that can still be able to handle volatilities like this, there's one EA that was built for that. There's one EA that has that incorporated in it, which is known as Perps Pro. And also for 72 hours, you can get 50% off on any license on Perps Pro, either the monthly license, quarterly or yearly as well. So use the same code GU50. Or for Perps Pro is Perps50. Use Perps50 on Perps Pro and you'll still be able to have a whooping 50% on any license of your choice. Drop a comment below if you're buying gold or selling Nasdaq this week. Subscribe for real-time war market update, all right? Real-time market updates so that, you'll be first to know. And as always, we're also going to be coming live on YouTube this particular week. And as always, stay safe, stay funded, and trust your strategy.